Okay, here we go, ladies and gentlemen. I'm going to try and solve problem 8.5a. So you have the textbook explanation of bank recs, and you also have what I sent along with the assignments. So now let's see if we can work out this problem. So we're going to do a reconciliation, which is an explanation of the difference between what we have on our books for cash and what the bank has for our cash. Neither balance is correct at the outset. We'll find the differences and make the appropriate adjustments. So we need to start with the end of the month balance. So from page 432, they give us the cash account balance, 9317.40 cents. That's your book balance. So in the real world, your general ledger balance is always referred to as your book balance. During the month, a number of deposits were made. They give you the total on page 432, $9,223.76. A bunch of checks were drawn during the month of June, and they give you the total, $8,395.66. Now from that, we can then calculate the end of the month book balance, add the deposits, which are debits, subtract the credits, which are the checks. And I got 10145.50 as the pre-reconciliation book balance. Bank balance, we go right and look at our bank statement, which is on page 433. The ending balance is $13,624.71. So obviously these two numbers are not the same. We're going to now explain why they're not the same. We're going to try to get down to what they call in the textbook an adjusted balance, which is the true amount of cash that we have. The books are not entirely correct at this point, and the bank balance is not correct at this point. Need to be updated. All right, so let's see, what do we have? Let's go through the checks first. Now on page 433, you have a couple of columns under the heading of checks and other debits, beginning with check number 731 and ending with check number 760. So first step is to see if the checks that were outstanding last month, which would be May, have they shown up? Have they been charged to our bank statement in June? All right, so the first check on the bank statement is number 731, was $162.15, and that was outstanding last month. What do? We check it off and we move on. It's not outstanding anymore. Same is true of 736, also on the bank statement, $345.95. Check it off and move on. 738 was outstanding last month, and it's still outstanding. And that's $251.40. We're going to subtract these from the bank balance. These will ultimately be charged against our cash account unless the checks are lost. All right, check number 739, also on last month's bank rec, page 432 on the bottom, $60.55. That's on the bank statement. Check it off and move on. Now we switch gears. Now the next check on the bank statement is number 740 for $237.50. At this point, we are comparing what's on the bank statement to our June cash payments journal. The first check in the June cash payments journal is 740. It's $237.50, which agrees with the bank. What do? We check it off and we move on. 741, that cleared. $495.15, check it off. 742, $501.90. It's on the bank statement, check it off and move on. 743, it's on the bank statement, it's $671.30. On our books, we have $761.30. So let's see. In this number here, our cash payments journal, we have $761.30. The bank says that check cleared for $671.30. The problem says that if there's any mistakes, you have to assume that they're made by the company. That would be the furniture company. What's the difference? $90. So at this point, you say to yourself, if I thought I wrote out a check for $761.30 and reduced my cash by that amount, but in fact it clears the bank for $671.30, I'm going to have to add that back. I deducted too much money over here in the cash payments journal. So that's going to go on the book side. Error on check number 43. You're going to add it. Could have gone the other way, but it didn't. All right, moving right along. 744 agrees with the bank. That cleared. 745, $117.25. That agrees with the bank. $298.66. That's number 746. That's okay. 747 was void, so you're not going to see that one. 748 is $450.90. That's on the bank statement. 749, $640.13. That's on the bank statement. So is 750 for $276.77. So is 751. That's $299.37. So is 752, $537.01. And 753, $380.95. 754, that's on the bank statement, $449.75. 755 is $272.75. That's on the bank statement. 756, it's on our books, but not on the bank statement. Where is it? Check's in the mail. 113.95. That's outstanding. 757 cleared for $407.95. 758 and 759 on our books. Neither one of them cleared. 259.60 and 901.50. So we have one old outstanding check, and then we got three, which is kind of typical in the real world. At the end of the month is when you're writing checks. They may not even have left the premises yet, so there's no way they can clear the bank. All right, so we got a total, $1,526.45. We're going to subtract that from the bank side. They should be charged to the bank at some point in the future. All right, what's next on the hit parade? Let's go to the cash receipts. Okay, so what do we have? We have deposits on the bank statement. And the first one is $690.25. That was a deposit in transit at the end of May. So it was a deposit that was made in May, recorded on the books in May, but did not appear on the May bank statement. We just check it off and we move on. That's never going to be a reconciling item. Okay, so now we go down the list, comparing the deposits according to the bank to the deposits we have on page 732, which is, for all intents and purposes, our cash receipts journal. So the 108,050, that agrees with the bank. So does 854.17, that's on the bank statement. So is $840.50. Now on the bank statement, we have two increases in our cash listed as MS, miscellaneous. So we don't know exactly what they are, but we know that they're unrecorded. They're recorded by the bank, but not by us. What are we going to do? We're going to add them in over here. $3,500 and $210. We'll add those in. That comes under the broad heading of unrecorded increases. So anytime you find an increase in your cash account on the bank statement, but it's not on the books, the broad terminology is unrecorded increase. No description of that amount. In the real world, you would have a description. So I'll just call them unrecorded increase. All right, what else do we have? Now we're up to the deposit on the bank, $896.61. That does not agree with our books. Our books, we have $996.61. Okay, so that's on June 10th on our books, $996.61. So in this number here, you have $996.61. The bank says, no, it's not $996, it's $896.61. At this point, you are not happy. Why? Because you added $100 more than you should have to the balance. To correct it, we'll have to subtract the $100 down here on the book side. We're going to subtract out that $100. All right, moving right along. What are we up to? The deposit on the bank for $882.95 agrees with our records on June 15th. The 1606.74 agrees with our records on June 17th. The deposit on our books, $897.34 on June 22nd, agrees with the bank. The next deposit on our books is $947.21 on June 24th. The bank says that deposit was $942.71. What's the difference? $4.50. And again, we're not happy. Why? Because this number included $947, which should have been $942. We put $4.50 too much in the deposits. How are we going to fix that? We're going to subtract it. This is on the books, the June 24th deposit. Okay, subtract it out, $4.50. Okay, we're getting there. The last deposit on our books is on June 30th. It's $1,117.74. It's not on the bank statement. That's what we call a deposit in transit. Deposit you made, a deposit you recorded, the bank doesn't have it yet. They'll probably pick it up on July 1st or on the next business day. That's 1117.74. The observant student will note this number, 13216, agrees with the number the authors have put in the column on page 432. So that's a good number. Let's go back to this side over here. Do we have any unrecorded decreases? We do. They're listed underneath the checks. There's an NSF. What does that mean? Not sufficient funds. So we made a deposit of $550 at some point, and whoever it is that gave us that check didn't have enough money in their bank account. So what does our bank do? They bounce it out. So the slang for that is a bounced check that you deposited. You also have the service charge. Which is $75. Okay. This is the sum total of our increases. 3,800. It's the sum total of our decreases. 729.50. You add that down, comes out to 13,216, and you're happy as hell. Why? It agrees with this side. It looks like we successfully reconciled the account. And we got one last thing to do, which is what? If you have stuff that was unrecorded, what are you going to do? You're going to record it. If you have items that you made an error on, you're going to fix it. So let's see. This 3,800, we need to debit cash to increase it. Cash in A and B. That's going to be a debit. I believe it says in this problem that all deposits are cash sales. So for the 3,500, I'll list them separately just so you don't get mixed up on this. The 3,500, I'm going to credit sales. And the 210, I'm going to credit sales. Which leaves me with the $90. That was a check error, and the problem says that all the checks are payments on accounts. So I'm going to credit accounts payable. So when we deducted too much cash, well, we fixed that as part of the 3,800. The $90, we also deducted too much from accounts payable. So what's happening here is you are crediting a liability account, which is making the balance greater, which is what you wanted to do. Moving right along. Okay. We have these errors. This is going to be a credit to cash, the 729.15. Cash in A and B goes down here. All right, what do we debit? Well, again, they said that all deposits were sales related, so the offset should be sales. Probably in the illustration that I gave you, they're collections on account, in which case you'd be debiting accounts receivable here. So we'll pick up those two items. The NSF check. Well, I guess you could argue this one. I'll tell you where I'm going to put it. I'm going to put it into accounts receivable. If that money is owed to us, it won't get lost if I put it there. That's the $550. That money's owed to us, right? We deposited the check, it bounced. I'm setting it up as a receivable. And finally, the service charge, that's probably going to go to an account called bank charges. That's an expense account in the real world. And there's our $729.50. Sum of those four items. What happens if we post those two numbers? If we post the 3,800 and the 729.50 to our cash account, I'll take this over here, add the 3,800, and I'll come over here as a credit, put the 729.50, recalculate my cash account, add the deposits, subtract the credits. 13,216, which agrees with our bank rec. So that is the true or correct amount of cash at the end of June. We've straightened out our books and records, and secondary feature of a bank rec is you can detect fraud by doing this consistently from one month to the next. So what happens next? Well, what happens next is you go to July and do this over again. You keep doing it until what? Until you can't take it anymore.